nato siya i-divide kung unsa ang ato ang gi-base. Gitahay, for example, gross profit man. So, gross profit imo unahon. So, gipangita man nimo ang net sales or ang cost. So, di na nimo siya mo na nimo ang i-divide. Also, we should take note na ang conversion utilizes the relationship between the relevant percentages. Computing COGS using net sales and gross profit rate. It is depending by the basis of gross profit rate in which the amount of COGS to be deducted from the tigas to arrive sa estimated ending inventory. So it is computed as follows. So scenario 1, gross profit rate is based on sales. So COGS is equals to net sales times 1 minus gross profit rate. So, if ang scenario is gross profit rate is based on cost, is para makuha na to ang COGS is net sales divided by the plus 1 plus gross profit rate. So, we have here an illustration. So, Marie's company reported the following information for the year. So, the gross sales is 3,400,000. Sales return is 200,000, sales discount is 36,000, in which sales allowance is 80,000. So, natay kana each of the following independent scenarios. So, to determine the amount of COGS. So, number 1 is gross profit rate based on sales of 25% and gross profit rate based on cost of 25%. So, scenario 1. So, gross profit rate is 25% based on sales. So, we have here ang katong formula in which net sales versus gross profit method purposes should be computed. So, katong mag-base na kita sa atong formula na atong ganina giingon. So, ang COGS is katong first is the net sales in which ang net sales nato dinia is para makuha natong net sales is gross sales i-minus nato sa sales returns in which 3,400,000 i-minus sa 200,000. Again, sales discount and sales allowances are not deducted from the gross sales for gross profit method purposes. So, kaya na naman tayo ka ng gross profit rate is mo na itong i-distribute na nato siya sa formula. So, 3,200,000 times 1 minus 25% is equals 2,400,000. So, scenario 2, gross profit rate is 25% based on cost. So, the same amount of net sales, diba nakuha na mo itong net sales kanina. So, which is 3,200,000 in the scenario 1. So, gamito na to siya kada na scenario. Since the gross profit rate is 25% based on cost, the amount of goods sold from the gross profit method purposes is computed as follows. So, ang cost ratio equals 3,200,000 na net sales. I-divide na to sa 1 plus 25% na gross profit. So, i-divide na to ang duha is muna siyang 2,560,000. So, always na to remember na ang there always basis of a given gross profit rate as the amount of COGS will be depending of the following basis. Computing the estimated ending inventory balance. So, after na-understand na nato ang following inputs towards the gross profit method is now, mo na yung type na igamit na nato sila all together in order to estimate or determine the amount of ending inventory by using the following formula guide. So, ending inventory equals tigas minus COGS. So, I have here an illustration to further know or para makabulota sa atohang learning. Para ma-apply nato ang atoang concept towards the problem. So, illustration for the year 2023, Apple Company had purchases of 1,200,000, purchase discount of 15,000, purchase returns and allowance of 90,000, and freight in of 300,000 at the beginning of the year. The company also had 400,000 of inventory. During 2023, the company generated gross sales of 2,135,000, sales return of 135,000, sales allowances of 70,000, and sales discount of 30,000. The company usually applies a gross profit rate of 30% based on sale, so required. Using the gross profit method, determine the estimated amount of inventory as of December 31, 2023. So now let's answer the illustration. So the following procedures in developing or relevant in determining the estimated ending inventory. So first is unahan na to kuha ang determine the amount of tigas. So first is the beginning inventory ng 400,000. I-add na to sa purchases and freight in, which is 1,200,000 and 300,000, less the purchase discounts and purchase return allowances, which is 15,000 and 90,000, and a total of 1,795,000. So for the computation of the CAS-DI, purchase discounts and purchase allowances is deducted from the gross purchases. So next, i-compute na to ang amount sa net sale in which the amount of COGS is derived. Net sales for the gross profit method is computed. So ating follows. So gross sales na 2,135,000. I-less na to siya sa sales returns na 135,000, in which aton net sales for gross profit method is 2 million. Again, ang sales return allowances is i-deduct na to siya sa gross sale. So now, in order to know or i-derive the amount of COGS from the net sales is i-compute na to ang katong step 2 na atong gibuhat, in which applying the gross profit of 30%. So ang gross profit rate na to kay 30% based on sales. So ang COGS na to is 2 million. So para makuha na tong COGS is 2 million na net sales katong gikuha na to ganina na atohang katong formula base is times 1 minus 30% is 1,400,000. Kumbaga, ang kuan na gid sa kaning cost of goods sold is connected siya sa net sales, in which ato ang gi-mention a while ago. So lastly, i-compute na nato siya ang duha kay nakuha naman nato ang COGS o tigas. So COGS or tigas is 1,795,000 i-minus na to siya sa COGS na 1,400,000. Therefore, the ending inventory is. So now, let's estimating the inventory losses from catastrophe. So ang gross profit method di ay is magamit siya in towards the inventory losses from catastrophe. So we have here the formula. So estimating ending inventory using gross profit method is less na to sa RV of saleable damaged goods if any, cost of undamaged goods if any, cost in transit inventory if any, cost of goods sold located in other location if any. So loss in inventory due to catastrophe ang total ana. So now it was discussed in the previous chapter that ang balance inventory is included siya sa in transit. So it is provided in the obtain of the entity that it is the purchases of the retained earnings and the entity for sales. So in this regard, ang following relevant gross profit method procedures for in-transit goods is if ang relevant in-transit goods is ang purchase FOB, shipping point is should be included in tigas. Mo ni siyang katong i-apply na tong gross profit procedures. So if ang sold siya ang FOB destination is dili na to siya abilon or should be excluded from the amount of net sales. Also, since the goods in transit are not yet stored or situated in the warehouse or any relevant facilities, they should be excluded from the inventory loss of equipment because it is equivalent to sa cost in transit inventory to be deducted. So in determining the inventory loss TI is one in following. So if ang relevant in transit goods is purchased FOB shipping point, ang equivalent cost to be deducted anak is equal to invoice price from supplier. And also if ang relevant in transit good is sold siya is ang FOB destination kay equivalent siya sa cost equals to sales invoice price less the amount of gross profit. Estimating inventory shortage or overage. So as previously mentioned, so ang gross profit method ay can magamit siya in using estimating inventory shortage or overage whether due to theft or errors na mahitabo during the recording of inventory transaction. So in estimating the amounts, an entity should compare the ending inventory balance sa iyahang based on physical count and ending inventory estimated using the gross profit method. So scenario, if ang physical count is mas less than siya, the estimated ending inventory balance is inventory shortage siya. So if ang physical count is greater than the estimated inventory balance is inventory overage siya. So here this na ako'y illustration. So, on January 1, 2023, Dandelion Company reported inventory balance of 780,000. During 2023, the company reported net sales of 4,200,000 and net purchases of 3,250,000. So, relevant gross profit is 40% based on cost. So, required is under each of the following independent scenario as determining the amount of ending inventory if shortage was here or overage. So number 1, inventory has cost of 925,000 which is based on physical count. So first, atong kuanon ang answeran ang general formula or ang basic formula. So COGS. So para makuha na tong COGS in which katong gi-answer na to ganina is ang net sales. So ang net sales which is 4,200,000 i-plus na to i-divide na to siya sa 1 plus gross profit in which 1 plus 40%. Tapos mo na siya, ang makuha na to is 3 million. On the other hand, kuha na to ang total goods available for sale in which ang 780,000 na inventory balance plus the 3,250,000 na net purchases. So, i-plus ang duha which is 4,030,000. After that, makuha na to ang duha is i-minus na to siya based sa general formula. So, TCAS, which is the 4,030,000 minus the COGS, in which 3 million, in which ang ending inventory nato is 1,030,000. Now, atin na siyang i-compare. So, since ang physical count balance nato is 925,000, in which mo na siyang given is lower than ato ang ending inventory in which it is 1,030,000. So, estimated ending inventory using the gross profit is ang atong na-estimate is ang inventory is shortage. So, shortage siya og 105,000. So, to get the 105,000 is 1,030,000 which is the ending inventory. I-minus nato sa physical count is 925,000 na atay inventory shortage of 105,000.